Hello traders and welcome to another video review. Today is Wednesday, January 3rd, 2023. Let's find out what's going on the economic calendar today. As you can see, we got some data here during the London session. The most important ones are still ahead of us. So we got the data from the German unemployment change and unemployment rate. Both of these data are scheduled for release 5 to 10, and the market participants expect the unemployment rate to stay at the 5.9% level and the unemployment change to decrease from 22,000 to 20,000 people. Then we got some kind of a gap in news releases because the next very important news is scheduled for release at 4 p.m. during the New York session. ISM manufacturing PMI, ISM manufacturing employment, ISM manufacturing prices, and JOLT job openings data. All of this data, very important and medium important one, as you can see, are scheduled for release at 4 p.m. Then at 8 o'clock we got FOMC meeting minutes, of course, from the US. 1 hour before this event we got Atlanta Fed GDP now, and then at 10:30 we got API weekly crude oil stock review. So quite busy day for today, especially during the late US session. So it looks like the market might get violated today, especially in the evening. So let's start with the majors. US dollar 4-hour chart is showing us a very deep retracement from the level of 1.1140 where the local high was made, and it looks like it was a swing high in form of the bearish engulfing pattern. So we got this bearish engulfing on 4-hour chart. We broke below 50, and now we just broke below 100 periods moving average. We broke below the key technical support 1.1010. Now it will act as the technical resistance for the price, and we are approaching the level of 50% of the Fibonacci retracement located at 1.0933. As you can see, the market cannot cope with the 100 periods moving average on the 4-hour chart, so it looks like the level of 1.0965 is now acting as a dynamic resistance. If we hit and break below 50% Fibonacci retracement, the next target is 61% Fibonacci retracement located at 1.0883. So this is the last level for the bulls in order to bounce and continue the movement higher. If we break below this level, most likely we will go even lower because the bearish pressure will be just too strong. On RSI we hit the level of 30, so right now the lows, the daily lows at 1.0939 are extremely oversold. Those levels should be treated like this, and we should see some kind of a pullback. Nevertheless, the pullback is limited by the 100 periods moving average, so the bearish pressure, as you can see, is very strong. We need to see the direction on the euro and the dollar in a short time frame, because right now this looks like the very strong bearish pressure. On a weekly time frame chart, however, what do we see here is that we move inside of the channel, so we move up. Nevertheless, the previous reversal pattern was the bullish engulfing made in the 17th July 2023. Now we got the shooting star pattern made around the level of 78% of the Fibonacci retracement, roughly around 1.1120. And as you can see, this big red candle might be a confirmation of the shooting star on a weekly time frame chart, which means we should go lower. Bearish pressure is strong. We are approaching the level of, as you can see, 55 and 100 periods moving average. So those levels are 1.0805, 1.0774. If there is no bounce, then even the lower channel line might be challenged. The key Long-term technical support is still located at the lows of the 2nd of the October 2023 at 1.0433, and as long as we trade above this level, most likely the outlook will be bullish. So this is the situation on the weekly time frame chart for the euro dollar. Let's now find out what is doing the US dollar to the Japanese yen, because we are going to have some data from the USA. So US dollar to the Japanese yen is showing some sign of strength. We got a very big pin bar with the lows at 140.21, and then we got the pullback towards the technical resistance at 141.88. Now we got the breakout, and the market is moving higher towards the 100 periods moving average at 143.24, and as you can see, the bullish momentum helps the market participants to do this kind of a movement. Let's don't forget that we still have one more technical resistance here before the moving average will be hit, 142.86. So that's the next technical resistance. This is the next technical resistance, dynamic one. But the key technical resistance horizontal lines are located at between 144.77 and 145. So as long as we trade below these horizontal lines around this area, the outlook remains bearish, because this might be only a bounce, internal bounce during that down trend. Let's find out if this is just the broader, if this is just a US dollar to Japanese yen moving up, or there is broader movement on the US dollar index. And this is a for our chart. Let's switch to daily, so we can see that after we lost 6.27%, now we have a bounce. Now we have a bounce higher. Nevertheless, the upside is pretty much limited. We got the first technical resistance from the 29th of the November low, roughly around 102.44, just where the 50 periods moving average is. So it might be quite difficult right now for the bulls to break above this level. The market is bouncing from the extremely oversold levels on a daily time frame chart, but we are not challenging the level of 50 on the RSI, the neutral level, just yet. On the 4-hour chart, however, let me just find out. There you go. This is the current situation on the 4-hour chart. So we are moving higher, we are moving up, we are moving towards this technical resistance. There is one more level we need to point out. So this level is of course 102.60. that's the next technical resistance. On the 4-hour chart, we are testing 100 periods moving average. Nevertheless, it looks like the market already almost hit the extremely overbought conditions, so we should expect some sort of the movement to the downside, some sort of the pullback. But as long as we trade below 102.60, the outlook unnecessary remains bearish. And last but not least, let's take a look at Bitcoin. Of course, just as we expected, the market broke above this technical resistance located at 44,800. We made a new swing high, 45,946. Now we reversed a little bit, pulled back towards the technical support, and now we're testing this area. So if there is no breakout below the lower let's say lower level of this zone, 44,544, then the outlook remains bullish. Market's conditions are extremely overbought, so we need this pullback to cool off a little bit, but then the trend is still to the upside, and the trend might be resumed easily. The next target, please notice, is 48,200. This is the next target for bulls if there is no significant breakout below the technical support, 44,544. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.